This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 24th, 2017. Our time is 8:42 Mountain. Radio show runs normally on 6:30 CHED, Sunday afternoon at 3. We are on earlier today due to Edmonton Oilers hockey playing the Predators at 3 o'clock. The Face-Off Show at 1:30. We are on from 12:30 to 1:30. Face-Off Show, Oilers, Predators at 3 o'clock. Good luck to the oil. Don't forget to connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week. And this is a beauty. See it online. 1+ carat radiant cut fancy intense blue. See it at rarecoloreddiamonds.com, featured diamond of the week. Some of the news of the week. Stocks did something they haven't done since 1987. Ronald Reagan was in office, and the Dow just did something back on Wednesday and carried forward to Thursday. We don't know, as we're taping on Friday, how things are going to play out, but the market has been up 9 consecutive days, and that is something to say the least. A lot of it based on Donald Trump as president, and investors obviously looking at the possibility of deregulation, fiscal stimulus, tax cuts, and they're hoping that will drive the stock market even further. The Fed coming out this week in their minutes saying a rate hike fairly soon. Federal Reserve officials express confidence they can raise interest rates gradually, while a hike fairly soon might be appropriate to avoid the risk of an overheated economy. That, according to minutes of the Federal Open Market Committee's latest meeting, showed many participants expressed the view that it might be appropriate to raise the federal funds rate again fairly soon if incoming information on the labor market and inflation was in line with or even stronger than current expectations. If the risks of overshooting, they're saying the committee's maximum employment and inflation objectives do increase, then they're talking about raising interest rates, and they're saying relatively soon. And Harold, you've been talking for quite some time about getting into the U.S. dollar. We know in Canada we're at 0.5% when it comes to interest rates, and no plans to raise interest rates. Possible cut. More than likely, they're going to stay the course at 0.5%. In the United States, they're above us, and they're going to continue to raise rates more than likely 3-4 times a year in 17, 18, and 19, and that is the recipe for a stronger U.S. dollar and a weaker Canadian dollar.
100% right, Randy. Again, that's a trend that is definitely happening and going to continue. So as far as I'm concerned, the U.S. is the only country right now in the world that can and will raise interest rates. We saw it at the end of 2016. We're going to see probably at least 3 interest rate hikes in 2017, which means that the U.S. dollar is going to continue to strengthen against other foreign currencies, one of them being the Canadian dollar. Now, you hear it all the time. Either you hear it on our show, or you read it in the financial pages, or you hear it on the financial news or whatever. And most people really don't understand the currency markets, but the simplest way to understand it is that the U.S. dollar is a reserve currency. It's the major currency in the world. Almost everything is priced in U.S. dollars. Commodities are traded in U.S. dollars. Stocks in the U.S. are obviously traded in dollars. Oil is traded in dollars. So the U.S. has got the reserve currency. The U.S. dollar can fluctuate tremendously, as other currencies have also. So, for example, at this point where the U.S. dollar is extremely strong, and just saying that the Canadian dollar isn't at this point, right now, if you were to go to the United States from Canada and you wanted to convert money, it would cost you $1,320 to get $1,000 American. So you'd pay $1,320 Canadian to buy 1,000 American. So that will give you an indication that the U.S. dollar is stronger and more valuable at this point than the Canadian dollar, the British pound, the Chinese yuan, the Australian dollar. The euro was stronger, but not much, and that is going to change this year. The pound sterling, the Swiss franc, the Japanese yen, and all that type of thing. So what does that actually mean? How do you make money from trading in the U.S. dollar? First of all, I've traded the currency markets and the oil markets and the metals markets, all commodities, for over 35 years. So I know the business very well. I had one of the largest brokerage firms in North America with over 300 brokers and 7 offices. So I do trade the markets and trade them for clients and know the markets fairly well. We've caught some of the biggest trends and the biggest bull markets in history when we, in 2000, recommended gold at $250, and it went all the way to $1,900. Similar with oil and other currencies. So the trend that we have right now is right in front of us, and if we don't take advantage of it, then shame on us, because there's a tremendous amount of money to be made. Now, most of the time when you trade the currency markets, you're going to trade it in the futures market. We are not recommending that in any way, shape, or form. Futures markets are very heavily leveraged. You've got to be an expert to trade them, and 90% of the people that trade commodities and stocks and mutual funds lose their money. Remember that. 90% of the people that trade commodities, stocks, and mutual funds lose their money. So that isn't an option for us. We don't want to ever put our clients in a position to where you could make an investment and lose more money than you actually put up. And that's what's possible when you trade on leverage. And we're not recommending that in any way, shape, or form. What we are recommending is taking advantage of this new trend in the U.S. dollar. I feel that the U.S. dollar, which is trading at the 101 level right now, just above par, I think it's going to go to 115 to 120. I think Trump is going to do a good job. I think that the U.S. dollar will continue to strengthen against other foreign currencies, and those foreign currencies are going to drop like the Canadian dollar. And the reason for that is, and please don't take this the wrong way because I'm Canadian myself, as is Randy. We love everything about Canada, but the facts are the facts, and the facts are that Canada is not going to raise interest rates. They're going to continue to drop them, and soon it's going to go to negative interest rates like they have in parts of Europe. You heard me right. Negative interest rates mean that if you keep your money in the bank, instead of the bank paying you interest, you're going to pay the bank in order to keep your own money. And it's not safe to keep more than $100,000 in a Canadian bank because of C-15 bill, which means that they can basically take your money and pay off any debts of the bank, that the Canadian government is really not going to bail out the Canadian banks that they own. They're going to leave that to the depositors, which is a horrible, horrible thing. If you don't know about C-15 and how that works and how that could affect you, please give me a call and I'll spend time with you and explain what the opportunities are and what the potential disaster is of that C-15 bill. Now, we're a private company. We don't trade on the stock market. We are not a public company. We're a private company. I own this company, for 35 years now, and we do a very good job for our clients. Now, we're in the alternative asset business. That means that we are not in the stock market. We're not trading mutual funds. We're not necessarily trading futures and options at this time. What we are in is the alternative asset business, which means that we are not into stocks and bonds and real estate and all that kind of stuff. We're in investments that are outside of the banking system that do far better than mainstream investments. For example, we have one investment that's all done in U.S. dollars that most of our clients are invested in that pays 24% a year. You heard me right, 24% a year, and that's in U.S. money. What we anticipate happening is that the U.S. dollar is going to continue to get stronger and stronger. It could go to 115 to 120. It's at 101 right now. If the Canadian dollar drops down to the 60-cent level, which I believe it will because of the real estate market, the banking situation, and oil, I believe that there's a huge amount of money to be made. Not only converting your money from Canadian to American and taking advantage of that trend, but also getting into a U.S.-based investment that's going to pay you extremely high returns. So been doing this for many, many years. Most of my clients are invested with us in our private investments, and again, everything that we're doing at this time is in U.S. dollars. So we're very excited about the future. I know most people at this point here can't see the forest for the trees because everything is so confusing. Interest rates are down to zero. You can't retire because keeping your money in the bank, you're going to make 0.5% at this point, and soon that will be gone. You keep your money in the bank. There used to be a time that we used to make 10%, 15%. In fact, back in the early 80s, 1980s, interest rates were at 22%. And putting your money just into the bank or into a CD or something like that, you were making huge returns. Those days are long gone. With interest rates at 0.5%, putting your money into a CD or a money market fund or just keeping it in the bank, you're losing money because you're still paying taxes, and with inflation, you're literally losing money by keeping your money in the bank. Also, you'll never retire keeping your money in the bank. So what it does, unfortunately, because people start to panic and they say, oh my God, what am I going to do? There's no place to make money. So they start looking at the stock market again. The Dow in the U.S. is at record highs. That doesn't mean that people that are trading in the Dow is making money. It means that if you're picking individual stocks, the chances are 90% that you're losing money. So the fact is that we don't want to be in those markets. They're controlled, they're manipulated, there's a plunge protection team. We don't want to be in those markets. Nobody that I know has made money in their retirement savings plans in Canada over the last decade. So why in the world would we want to continue to try that? There's other opportunities that are far superior to that. They're based in U.S. investments. They're investments that I control myself, and most of my Canadian clients are invested with us. Our clients that were up in Fort McMurray, if it wasn't for our natural diamond investment company, would be destitute right now. But those clients are making over 25% a year return with us. Then we have other investments where our clients can double their money over a 1.5 year period by being partners with us on other deals. So again, we're mainstream. We do things different than most other firms, but then again, we probably have the only firm where our clients are making money. So there's great opportunity in the markets at this point. I speak to clients on a daily basis. If you want to learn about our programs that, again, are outside of the system, that are alternative assets, definitely give me a call, and I'll spend as much time with you as you need to explain what your opportunities are. Most importantly, at this point, if we don't take advantage of this run-up in the U.S. dollar, then shame on us. There's tremendous opportunity to make a lot of money when most people are sitting back and saying, how in the world am I going to grow my money? Because there's no opportunity unless you're into an alternative asset. So, again, at this point, Randy, we got a gold market that's trading in a range at this point here. It's traded as low as 1120. It's traded as high as 1260. The major number for gold is 1380. If gold was to break above 1380 and close twice above that, we would now be in a market that we would think the gold would start to run again. I just don't see that happening at this point because of the strength of the U.S. dollar. Because there is a direct correlation between the U.S. dollar and gold. When the U.S. dollar is strong, gold is weak, and vice versa. In 2011, when gold hit its all-time high of $1,920, the U.S. dollar was all the way down to 72 cents. Now we're back up to 1260, and the U.S. dollar is trading at par. It's actually moved up 25 cents since the lows that we saw. So you need to know the currency markets, and fortunately, that's an area that I have tremendous expertise in and have traded very well for my clients over the years. We stand a great chance of making a fortune in the currency markets and in our private investments. I would love for our Canadian clients to join us and, again, have a clear path to hopefully one day being able to retire, because if you don't do anything at this point, you're going to be stuck in a market like a retirement savings plan that you're never going to make money with. So what we see at this point here is that gold has rallied, and the reason that gold has rallied at this point is because of certain things that Trump is doing. The market likes Trump because he's a builder, and they believe in the United States that he's going to build bridges and roads and all that type of thing. That's why copper looks good at this particular point. But also understand that the fact is that as the U.S. dollar gets stronger and stronger, it's going to push gold down. And the reason that gold is up at this point is primarily because President Trump has been making enemies with Mexico and other countries like Australia and now with the Muslims and everything like that. So gold is on alert at this point here because, again, Trump is a really tough guy. A bit of a bully at times, but I've met him on several occasions, was with him actually last Sunday at a dinner at Trump International Club in Palm Beach. So the fact is that this guy is doing a good job. Right from the word go, he's been out there. He's been living up to his campaign promises. People don't like him. Half the country hates him. You've got people protesting every single day, but the guy is doing what he said he was going to do, which no other president has really done for a long time. So I believe that we're going to see the U.S. economy strengthen. Interest rates are going to go higher, U.S. dollar is going to get stronger, and we want to take advantage of that. So give me a call and let me explain to you what your opportunities are and how you can start to make money in U.S. dollars again.
Connect with Harold. Call 1-800-432-1022. Grab a pen, paper, mark this down, 1-800-432-1022. Harold will be happy to take your call. You will speak with him personally, privately, everything discussed confidential. The website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. Our featured diamond of the week, and you can see it at rarecoloreddiamonds.com, featured diamond of the week, a 1+ carat radiant cut, fancy, intense blue. See it online, rarecoloreddiamonds.com, featured diamond of the week. I know there are starting to be people that are very concerned about the stock market, as we said. As of Wednesday, 9 consecutive days, the Dow is up. You add on Thursday, 10. That has not happened since 1987 when Ronald Reagan was in office. There are people that are very, very concerned about liquidity. Hedge fund liquidity plunges to danger zone for U.S. stocks. There's safety in numbers until a stampede occurs. That's the theory underlying a study of hedge fund holdings by Novus Partners, which sought to calculate how easily the market could absorb concerted selling by large money managers. Using analysis that turns mainly on how much volume is occurring in stocks favored by professional speculators, Nova says liquidity is at an all-time low, and that means that if people start to sell, you could really see some big moves down. Also, the NASDAQ. Get our free weekly newsletter. We have this story. The NASDAQ now more overbought than at the 2000 bubble peak. Get our newsletter from Harold. We send it out by email, free of charge, every week. You can go through it in 5 minutes on any device that you have, or you can spend hours going and really doing all the research you want. It's there for you. Connect with Harold, 1-800-432-1022, rarecoloreddiamonds.com, the website. Get our free weekly newsletter as well. King World News, Michael Belkin called the 2000 market top. Remember the NASDAQ? Now the publisher of the Belkin Report, an institutional newsletter on asset allocation, is waving a warning flag about the level of margin debt. On the New York Stock Exchange, margin debt is the loans bank and brokerages make to investors, using their stock and bond holdings as collateral. In November, it neared an all-time high of $507 billion and has hovered close to that level since. It's something that has been hanging over the market, he says. The market is addicted to debt. There's a precedence for a high level of margin debt foreshadowing a market collapse. It peaked in March 2000, congruent with the market's March 24 top and subsequent 49% decline. And it peaked again in July 2007, a few months before the market top in October. Another disturbing factor, the percentage rise in margin debt over the latest bull market is 193%, exactly the increase from 2002 to 2007, when the financial crisis began and the S&P 500 index fell 57%. The problem with margin debt is that it causes a cascade effect. As the market falls, investors get margin calls on their loans and have to sell stocks to maintain their margin debt minimum. But there are some red flags out there right now regarding the NASDAQ being overbought, Obviously, concerns about margin debt and concerns about liquidity when it comes to hedge funds. It was interesting to note that, as we mentioned off the top of the show, many see that they're going to be raising rates in the United States because of the Fed minutes that came out on Wednesday. And one of the things that caught my attention was Rick Rule from Sprott USA. He went on to talk about the U.S. dollar and gold, and he says, we are now at an odd place in the world. It's a place where I've only seen it twice before in my career, where the U.S. dollar and gold are doing well simultaneously. Clients in Europe have talked about transferring 16 trillion euros in private circulation in Europe, and that would obviously be a huge amount of money moving into the United States. And if 1 trillion or 1.5 trillion euros migrated over the next 18 months to North America as a consequence of what's happening in Europe, what would that mean is that the U.S. dollar, despite some problems in the U.S. economy and some nervousness associated with the new administration, is relatively attractive compared to other alternatives. And he says, my suspicion is the U.S. dollar in the next 18 months time frame will be very strong, and then at some point down the line will weaken, and that at that point, gold will do well as a consequence. This will mirror what happened in the mid-'70s and again in 2002. These were both periods where gold and the dollar did well simultaneously, which was a bit of an entourage to a decline in the dollar and a strong upward move in gold. He said, I wouldn't be surprised to see it happen again over the next 18 to 24-month time frame. And Harold, it is sort of an interesting time because we are seeing the dollar strong in the United States. We are seeing gold hanging in there quite tight, and a lot of it has to do with a fear trade because of what's happening with the Trump administration, also geopolitical concerns with what's happening in North Korea, around the world, all the other hot spots. And yet, like we said off the top of the show, if the United States goes to start raising interest rates, no one else does. People will move into that currency to get the extra money, make the extra money, and the U.S. dollar will go up. We have about 3 minutes left in our segment here.
All right. Well, the thing is about the liquidity, by the way, in the stock market at this point. I believe the reason for that, and this is a phenomenon happening at this particular point, is that prior to the elections, all the big money in the stock market was on the sidelines. They didn't know what was going to happen. It was a close race, and all the big money was on the sidelines. Once Trump got elected and investors started to see the potential, all the money started to come back into the marketplace. So now you've got all this money from the U.S. investors that came back into the Dow. And when the market started running and broke over 20,000, that's when people really got excited and money poured in from all over the world because, let's face it, all throughout Europe and Asia and everywhere, their economies are doing terrible, so are their stock markets. The only place to make money right now is in the United States, and investors understand that. So you've got all this buying going on and nobody wanting to sell because the feeling is that we could see a very strong U.S. economy, and there's no other game in town for the Europeans and the Asians and everybody else where to put their money. So all that money is going into the U.S. markets, and that's why at this particular point that you're seeing a lack of liquidity because you've got way more buyers than sellers, and I believe that's a phenomenon that is happening as a result of the confidence that the big money has in Trump.
If you're confused about the markets at all, you read different stories, read our newsletter, looking for clarification, connect with Harold. 1-800-432-1022. You know, how do you invest today so you can put away some money and retire comfortably later in life? That's why we do this radio show. Give Harold a call. He'll be happy to speak with you personally and privately. As he said during our first segment here, he speaks with many clients throughout the entire week, and people are surprised. Yes, you will be talking with Harold Siegel. 1-800-432-1022. The website is rarecoloreddiamonds.com. rarecoloreddiamonds.com. One of the other things that came out this week, and this is where we get into currency wars, and that is good for hard assets like diamonds, also gold and silver, and would be potentially good for the U.S. dollar as well. Steve Mnuchin, he is the new head of the Treasury in the United States, Treasury Secretary. He has said that he will not label yet China a currency manipulator. But then you had Donald Trump say just yesterday that China is a major manipulator of currency. So you can see that that is on the radar of the Trump administration. He talked about it during his run-up to being elected president of the United States, that China was manipulating their currency and he wasn't going to have it. But it's a telltale sign that Steve Mnuchin and Donald Trump are keeping an eye on the Chinese currency, and who knows what moves will be made to counteract that. And I would imagine at some point we could see some interesting moves in currencies around the world due to currency wars. If you want to learn more about currency wars, speak with Harold, 1-800-432-1022. We're going to come back and talk about diamonds. As the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on February 24, 2017. Our time is 9:09 Mountain. And do not forget, if you ever miss a radio show, they are archived on Harold's website, rarecoloreddiamonds.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You can take us anywhere you go. People love listening to podcasts, and we are portable. This show goes anywhere you do. Now, today, we're normally on at 3. Today, we're on from 12:30 to 1:30. The Oilers playing the Predators at 3. The Face-Off show coming up here in about 20 minutes' time. Good luck to the Oilers as they face a very tough Nashville Predators team. Our featured diamond of the week is a 1+ carat radiant cut fancy intense blue. You can see it online, and this is a very intense blue diamond. And not only that, it's a big diamond, 1 carat plus. See it at rarecoloreddiamonds.com. Featured diamond of the week. And Harold, give us the backstory on this diamond, because it's another one of those diamonds from rarecoloreddiamonds.com and our vaults that is a museum piece. It is a beauty.
It certainly is, and blue diamonds have been the best investment diamonds of all, especially over the last 10 years. This one happens to be a carat, which, again, for a blue diamond, I mean, we've seen some blue diamonds over the last few years that were in the 10, 15, 20 carat range that sold for multi-millions of dollars. In fact, with blue diamonds, back in 2005, a vivid blue diamond sold at auction, an important one, at about $200,000 a carat. Last year in 2016, vivid blue important diamonds were selling for $4 to $5 million a carat. Probably the biggest increase in an asset over a 10-year span that I've ever seen. So blue diamonds will continue to go higher because there's so few of them available. So the rarity of that diamond is extreme. What turns a diamond blue? Boron. Most diamonds that come out of a mine are white, but sometimes a mineral will seep into that ground and turn a diamond blue or orange or green or red or that type of thing. So this diamond turned blue because of boron. So you could have pulled thousands and thousands and thousands of diamonds out of this particular mine, and this one rough blue diamond would have come out. Now, on this particular diamond, it was just over 2 carats when we purchased it as a rough diamond, and it cut down to right around a carat, a radiant cut, which is a square cut diamond, and the color is intense. So it's got a very heavily saturated color. And the heavier saturated the color, the more the diamond is worth. It's also important that you understand that only one diamond out of 100,000 is a colored diamond, and just because it's a colored diamond doesn't mean that it's investment quality. For example, blue diamonds come in several different colors, like a light blue, a faint blue, and even though they're blue, they may not be considered investment quality. When you start getting into the fancy blues, the fancy intense blues, the fancy deep blues, and the best of all, the fancy vivid blues, that's where you start to see these diamonds really start to take on huge increases. I mean, it would not be unusual for a diamond like this to sell for the 7 figures. It's only a carat, but the color of it is so extreme, as you can see by the video. It's just one of the rarest diamonds you'll ever see. You put a diamond like that away for 10, 15, 20 years, and you've got an asset that will grow more than any other asset that you could imagine. And the best example I could give you was Shirley Temple's diamond that sold in 2016. There was a blue diamond, a deep blue diamond, that was actually purchased in 1940 by her father for the piddly amount of $7,100. Now, it was a big, deep blue diamond. Color was spectacular. It was held in the family since 1940 till 2016, so that was, 76 years. In 76 years, that diamond that stayed within the family trust was bought for $7,100 and sold for $25 million. $25 million for an asset that was originally purchased for just over $7,000. So that's the type of returns that a rare colored diamond can give you. Now, the fact is that most of us cannot afford $25 million diamond. But you can afford, in a lot of cases, $20, $40, $50, $100,000 diamonds. And if you look at auction, those diamonds go up tremendously. For example, yellow flawless diamonds have gone up tremendously since 1980. In 1980, you could have bought a fancy yellow flawless diamond for about $500. Today, those same diamonds are $20,000. My grandchildren, I have 4 of them, I put away diamonds for their future. No stocks, nothing else, just diamonds. Because in 20, 30 years, when my grandkids are ready to make their way into the world, they're going to have an asset that is worth something. Could you imagine trying to do the right thing for your kids and grandkids, buying them General Motors stock, and then in 2008 finding out that the company is bankrupt and those stock is worthless? Who would have never thought that a company like General Motors could go bankrupt? But they did. So did major banks. So did major insurance companies. If it wasn't for the U.S. government bailing out, 2008 would have been the biggest financial disaster of all time. So the fact is that I don't trust those markets. I don't trust the paper asset market. So what I do for my family is I put away hard assets, gold and diamonds. That's where the true wealth is. That's where the intrinsic wealth is, and that's where I want to put my money. So again, a diamond like this, a 1 carat, intense blue, radiant cut diamond, is one of the rarest diamonds you'll ever see. Now, last week, we showed a green rough diamond. Was it the green or the pink?
It was the green.
I think it was the pink.
No, it was the green, I'm pretty sure.
It was the green. So we're also into rough diamonds, means that we mine our own diamonds or buy diamonds directly from miners, and we have a cutting facility in Antwerp, Belgium, and in New York, where we cut and polish these magnificent diamonds, send them to GIA in New York to get graded, and then you're talking about the finished product, which is what you're seeing in front of you today, that blue diamond. So, again, when you look at investing, alternative assets in many cases are the way to go. If you look at classic cars and art and those type of investments in rare diamonds, they do tremendously well at auction. When you look at other assets, they don't do anywhere near as well. So we want to stick with, number one, what gives us the biggest return on our investment with the least amount of risk, and we also want to be invested in assets that are in U.S.-based currency, because we're going to make another 30, 40, 50% return on the currency, along with what we're going to pick up on our alternative assets. So, again, Randy, this market at this point is looking stellar. The worst investments around the world right now, the countries that are doing terrible, it's a smart move to get money into a portable private asset like a rare colored diamond that can be sold in other currencies, because again, as other currencies fall, we want to sell in U.S. dollars. The other thing that you should know at this point is that we own our own auction business. So it's one thing to be able to buy a diamond, it's another thing to be able to sell it, and we're developing our rare colored diamond. It's called H. Siegel Fine Auctions, and it's our exit strategy for our clients down the road. Now, we have a live auction site, and we have a new site that is opening up, and we will be having our first auction on this new site coming up in March. So stay tuned for that. If you haven't signed up for it yet, go to H. Siegel or HS Fine Auctions, H. Siegel, S-E-I-G-E-L, Fine Auctions, and sign up for this next auction. You're going to love it. It's going to be a 4 or 5 day auction, and every item that's going up for bid will have a verbal description of it. It's not like going to eBay, for example, where you just look and read about it. It's going to have a full verbal description of it, and the fact is that there's going to be some amazing diamonds. We plan on holding auctions pretty well every single month. Because of the economy in Canada, several of our clients have to sell their assets early, which we're not happy about, obviously, because the longer you hold them, the more and more these diamonds are worth. But I certainly understand how the downturn in the Canadian economy, especially up in Fort McMurray, has wreaked havoc on some people's expenses and investments type of thing. So, again, we're going to have our first auction on our new site coming up in March. We'll keep you advised every step of the way. I believe within the next week to 10 days, we will have the entire catalog up. Not only are we going to be offering diamonds, we'll auction off some amazing coins and gold coin sets and silver kilo coins and some amazing, amazing items that, again, everybody's going to get an opportunity to bid on, and it's in U.S. dollars. And again, because we anticipate that the U.S. dollar is just going to take off and run, it's a great way for you to get assets in U.S. dollars. We may even have some sapphires and rubies and those type of jewelry, because we also own Diamante Atelier, which is our jewelry division, where we have over 3,000 pieces of museum-quality jewelry that will literally take your breath away. So a lot of exciting things are coming up. We've got our 2 private investments, Natural Diamond Investment Company, that is paying 24% a year return to our Canadian clients in U.S. dollars. We also have our private investment on rough diamonds. We've got Diamante Atelier. We've got Rare Colored Diamonds, which is our website for some of the rarest museum quality pieces ever. And we also have about $500 million worth of the rarest diamonds in the world in a private collection that we're holding. Some of them are Elizabeth Taylor's pieces. I'll let the cat out of the bag. We may even include in this auction coming up one of Elizabeth Taylor's brooches, which is one of the greatest investments of all time. So a lot of exciting things are coming up, Randy. Again, very excited about the featured diamond, but mostly excited about what's happening in the currencies and how that's going to make our investments for our clients even that much more profitable. You got to give me a call so I can go over with you next week what the opportunities are to get out of Canadian dollars into U.S. dollars and into private investments that can pay you the type of returns that will allow you to retire one day.
Featured Diamond of the Week, a 1+ carat radiant cut, fancy, intense blue. See it. RareColoredDiamonds.com, featured Diamond of the Week. And last week, Harold was wondering, we had that 2.5 carat fancy, intense green.
That's it. Yep.
That's right. Potential to be near flawless. That was a rough. The week before, we had a 0.51 carat radiant cut, fancy, intense orange. And the week before that, we had a 1 carat cushion cut, fancy green, internally flawless. Yes, we do have the greatest diamonds on the planet at RareColoredDiamonds.com. RareColoredDiamonds.com. Speak about investing in diamonds, the different programs Harold is talking about. Connect with him, 1-800-432-1022, 1-800-432-1022. The website is RareColoredDiamonds.com. One of the interesting stories that we have in our newsletter this week, what makes pink diamonds pink? They're one of the world's rarest jewels. but nobody knows for certain why pink diamonds are pink. Everyone's talking about them, and everyone loves them, says Jeffrey Post. He's the curator of the National Gem and Mineral Collection at the Smithsonian's National Museum of Natural History in Washington, D.C. And he says, yet you can't tell people why they're pink. Other diamonds get their color from chemical impurities that absorb light. Yellow diamonds contain traces of nitrogen. Blue diamonds contain boron. But no similar impurities have been found in pink diamonds, leading scientists to speculate that the color may be the result of some kind of seismic shock that altered the stone's molecular structure. It's now hoped that a cache of brown and pink diamonds from the Argyle mine in Western Australia may solve the mystery. The mine, owned by Rio Tinto, going to be shutting down in a few years, is the world's largest source of pink diamonds. 90 to 95% of the world's pink diamonds coming from Western Australia. Even though they are so rare, only a few are produced each year. As a result, and as well revealing what makes them pink, scientists hope that studying the diamonds will tell more about the history of the planet. Diamonds are Earth's messengers, according to Post. They come from 100 miles below the surface and tell us about a part of the Earth that we can't visit. They're also giving us a peek back in time, because most diamonds formed about 2 to 3 billion years ago. Each one is a time capsule. And the pink diamonds, because they're different from all the other diamonds, have a different part of the story to tell. Scientists have already examined the Argyle diamonds using a mass spectrometer to try and find any traces of impurities that may have caused the pink color. The machine agitates the diamond and analyzes the chemical structure of the atoms that are released. There is no impurity that we've been able to associate so far with pink diamonds, says Post. Spectroscopic measurements don't show any additional features that you can ascribe to a particular coloring agent. And that is one of the stories we have in our free weekly newsletter. And the reason I bring it up, it just goes to show how rare these pink diamonds are. They don't even know why pink diamonds are pink. We know why yellows are yellow, green, green, obviously blue, blue, but with pink, it is the great mystery. And then you add to it, as they say, it's like a time capsule from billions of years ago, 3 billions of years ago, and pink diamonds are really a storyteller of the Earth's crust and the past. And Harold, that is the beauty of investing in rare-colored diamonds. The backstory is something even the art world has, obviously Picasso and Rembrandt, and they have amazing backstories, but nothing compares to naturally colored diamonds and rare-colored diamonds. The backstory is simply amazing.
It certainly is. It's always nice to know the history of something like a diamond, and a lot of these diamonds do have history. You know, it is true that they can't figure out what turns a pink diamond pink, or what turns a diamond pink. They know that boron turns a diamond blue. They know that uranium turns a diamond green. We know that nitrogen turns a diamond yellow or orange, but we do not know necessarily why diamonds turn pink. But the beautiful thing about the pink diamond market, it's a tiny market. And there's one mine in particular, the Argyle mine in Western Australia, that produces 95% of the pink diamonds in the world. And we have an unusual opportunity there because since 1986, this amazing mine has been producing over 30 million carats of diamonds a year, mostly low-grade industrial white diamonds. But out of all that mess of diamonds comes the rarest diamonds on Earth, known as the Argyle pinks. And basically, what's so exciting about this is that they produce about 55 diamonds a year that go out on what is called the Argyle tender. In actual fact, if you take the entire production of Argyle tender diamonds in 1 year and put it into a champagne glass, it won't even fill the glass. That's how small this diamond market is. But they're also known as the most concentrated form of wealth on earth, and here's the great opportunity. The mine is going to close before 2020, which is less than 3 years from now. So normally where you would wait, 10, 15, 20 years for your, diamond to increase and, to a high level, that's going to change with the Argyle mine closing because there won't be any more pink diamonds. So over the next 5 years, I think that my clients will make more money in Argyle pink diamonds than almost any investment that they've ever made. So this is a one-time opportunity. There's no other mine in the world that produces what the Argyle mine does, which is 95% of any colored diamond. So we've got this unusual opportunity. Rio Tinto owns the mine. They told us that, and everybody else, that they're closing the mine because it's not producing anymore, and there goes the world's supply of pink diamond. What an unbelievable opportunity. And these diamonds are priced in U.S. dollars, which means that we could not only do well on the appreciation of the diamond, but on top of that, on the currency, it's really a phenomenal opportunity that we will never, ever get again. Now, many of my clients over the last 10 years have put away these amazing diamonds for their future. It's way better than any retirement savings plan that you could ever go into. As we discussed before, 90% of people that trade in stocks or have their money in retirement savings plans lose their money. So why in the world would we visit that when we could put long-term money away in an asset that will never be here again, which is Argyle pink diamonds? So again, Randy, very excited about that. We were the first ones to bring Argyle to people 10 years ago, and now it's the most sought-after investment diamond that there is. But again, it's also known as the most concentrated form of wealth on earth, as these are small diamonds. In fact, most of the diamonds in the Argyle tender are between 0.5 and 1 carat, and again, that's not a huge diamond, but for a pink diamond, it actually is. So we're just ecstatic about this. We've got the opportunity to take advantage of a supply and demand situation where the demand for these diamonds are extremely high, but the supplies are very low. That's a recipe for making a lot of money.
Well, I think I'm going to change what I normally say. I usually say the most secure and profitable investment, millions of years in the making. I'm changing it going forward. It's billions now. That's the title of one of my favorite TV shows, Billions. And yes, it's billions of years in the making. Rare colored diamonds, nature's art. Private, portable, stable wealth. Speak with Harold today about starting your own diamond portfolio and obviously the different programs that he has in place where you can start making money today. You don't need to sit in a GIC and get 0.5% or 1%. You can be making money today. Connect with Harold, the telephone number, and this is something that you should definitely write down, 1-800-432-1022. 1-800-432-1022. Harold, we have about 30 seconds left, and final thoughts for today.
Yes. Again, the markets are going to be very volatile. There's not a lot of opportunity. Now is not the time to speculate and take unnecessary chances in the market out of desperation. There's opportunities for you to make money outside of the stock and paper asset market. And again, it would be my pleasure to spend as much time with each and every one of you if you need to know about how to make money in the alternative asset market.
Thank you very much, Harold Siegel, for another great show and your knowledge.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
And you can use Harold's knowledge as well. That's why we do this radio program every week. That's why we put a newsletter together for you. Speak with Harold. He talks with literally hundreds of people, hundreds and hundreds of people in a month. They call in and they've heard the radio program. Connect with Harold, 1-800-432-1022, 1-800-432-1022. The website is rarecoloreddiamonds.com. And take a look at our featured diamond, the 1+ carat radiant cut fancy intense blue, featured diamond of the week, rarecoloreddiamonds.com. Oilers Predators, 3 p.m., face-off show coming up next. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.